rural consumption has seen a marginal slowdown compared to the buoyancy seen in the first quarter, according to Nielsen data. It's bad news for players like Dabur, which plans to strengthen its rural distribution network by rolling out various initiatives. So does it throw Dabur's double-digit volume growth target for the second half of FY19 in jeopardy? Let's ask Mr. Lalit Malik, the CFO of Dabur. Mr. Malik, thanks very much for joining in. Appreciate you taking out the time. I'll start off with that, which has been a slightly more disappointing festive season. And what does it do in terms of, your volume targets, your planned double-digit growth targets? Does that push it a little forward in terms of the timelines to meet it?
Well, I think as far as our volumes are concerned, what we still feel is that on an annualized basis, we will continue to have lower double-digit volume growth. There has been some seasonality which we have seen. There was a high growth in quarter one and quarter two was a little muted. But considering the overall scenario for the annualized basis, we do expect that our growth in India FMCG is likely to be in the lower double-digit on an annualized basis.
Considering now that, the economic data also that's coming out, and particularly the GDP number that came out at 7.1% below expectations, suggests that there's some a bit of a slack in consumption. Is that a big worry for you?
Well, I think if we were to look at in terms of the growth scenarios, what we do expect is that the sentiments have been to some extent muted. At the same time, what we do expect is the winter is going to be a little mild this year. So there will be some impact. But if we were to look at on an annualized basis, I think things will even out. So we do expect to be steady growth going forward as far as the top line is concerned. On the margin, there would certainly be some pressure at the back of inflation, which will have some impact on the margins. But considering the fact that we are working towards our synergies and cost reduction initiatives and select price increases, our efforts will be to maintain the margin as we go forward.
So can you quantify that for us, sir, in terms of what kind of, how much of a margin impact will you see, and what is the quantum of, cost measures control that you're going to be taking?
Well, I think it's very difficult to quantify the exact amount, but what we certainly can see is that there has been an inflationary impact of around 3.5 to 4% that we have seen on the input cost of our category of products. However, our price increase has been within the range of 1.5 to 2%. So therefore, the differential is something that our efforts have been to absorb through our synergies and cost initiatives.
All right, so closer to about 1.6%. So let's talk about, the split between the rural as well as the urban footprint for you. So while your footprint and reach in the rural segment is stronger, the business contribution still comes in majorly from the urban segment. Is there a plan to make sure that the contribution is you up the ante on the business contribution from the rural segment as well to match the urban segment?
Well, I think if we were to look at the split between rural and urban, it's around 47% of our revenue comes from rural and the balance is from the urban. And what we have seen is that the rural growth has been comparatively faster as compared to the urban growth, primarily on account of our expansion of the distribution network and having the regional focus and improving the portfolio through direct distribution. So therefore, we have seen rural growth to be at a better pace as compared to urban. But at the same time, the urban growth is happening at the back of very strong modern trade growth and cash and carry growth. At the same time, the e-commerce business is also showing a very healthy growth for us, though the base is small. So in a nutshell, there has been growth both on the urban as well as rural, but rural has been comparatively higher as compared to the urban.
What would the growth trajectory be for the rural segment and the urban segment?
Well, as far as the growth is concerned, as I said, that overall we do expect to be on an annualized basis at low double digit. at volume on India FMCG side.
Okay, let's talk about what is going to be the next, big product or a segment that is going to drive Dabur's revenues. Are you focusing on specific categories for the next leg up on growth? And could you break that up for us?
Well, I think as far as our category growths are concerned, we do expect, in view of the winter coming forward in next few months, good growth on the health care, health supplement sector comparatively, specifically on Chyawanprash, honey, and also considering the fact that we are picking up three strong brands and investing heavily on to their distribution and ad pro support. We do expect those brands to also give us a very healthy growth, and they are Lal Tel, Honey Tuss, and also Hajmola. So we and Pudinara to say. So we are focusing on those categories. At the same time, other categories like shampoo or hair oil, at the same time skincare and juices also we see a very healthy growth, as in case of juices we are already a market leader, and we are consolidating our position. So each category there has been different initiative and focus, and overall we do expect that we are able to maintain our market share and grow wherever there is an opportunity.
Right. So in earlier communications, the India Business CEO highlighted that three categories in particular is where the targeted growth is expected to be about 15 to 25% in the next 3 years to come. That's going to be the digestive area, the cold and cough category, and baby care as a segment. Is that going to be a meaningful contribution to the revenues of Dabur from these three segments?
Well, certainly, I think considering the fact that we are investing heavily there, the growths are likely to be accelerated, and therefore in terms of the contribution, they are high margin products, and we do expect to help in terms of strengthening our bottom line.
Mr. Malik, that was going to be my next question. You are aggressive in a lot of these categories, which might come at the cost of margins. You yourself have said that H2 might see a bit of a dip on an overall basis, about 150 bips, but you have contribution from the high margin segment starting to pick up as well. What does this do to the trajectory, not just over the next couple of quarters, but if it is possible to predict the margin trajectory over the next 6 quarters?
Well, I think if we talk in terms of margins, there would certainly be pressure, as I said earlier, considering the fact that there are inflation, there are fuel-related costs, and there is also on account of the currency devaluation. So we do expect the pressure to continue on the margins. Our efforts is going to be to absorb the margin through our cost initiatives and select price increase, and maintaining the margin that we currently have. That's going to be our efforts. But it will all depend upon how the inflation will pan out, how the consumer sentiments and competitive prices are going to be in terms of our category of products. So we'll have to see those implications and then take our call. But certainly our efforts is going to be to ensure that we maintain our margin, but at the same time a bigger focus is going to be to maintain our market share and increase our market share.
I know the reason why I asked you that, because you were talking about specific categories, and I thought because the high margin categories would make a meaningful growth, then therefore it will help you mitigate some margin pressures. But fair enough, since you're talking about categories, just one question from my end on the international business. There you've seen some leg up. How does that look like shaping up over the next couple of quarters at least?
Sure. As far as the international business is concerned, on the local currency level, our growth has been very healthy and at a very steady pace, specifically when we talk countries like Turkey, Egypt, Nigeria, etc. But the exchange devaluation is pulling the consolidated amount down, because there have been very steep devaluation that we saw in Turkey, for example, at 30%. So that pulls down the consolidated level of revenue that we talk about. But when we consider on the local currency level growth in the local market, there have been very healthy double-digit growth that we have seen in these markets, and we do expect this trend to continue. So other than the exchange and some geopolitical disturbances that we have seen in MENA region, otherwise the business seems to be at a very steady pace and on the growth path.
Okay. Right, sir. We've got an idea on pretty much, all of the aspects. Just one more thing that before we wrap up, that I'd like to ask you about is, what is the plans for distribution, and how much more are you planning to strengthen it?
Sorry, I didn't get it. You're saying a plan regarding the distribution?
Yes.
Okay, as far as our distribution is concerned, we are focusing on the regional growth under the scheme of RISE, which is the regional initiatives and speed of implementation. We are focusing more on the activation at a regional level, understanding the differentiation between the states that we have within the country, and we are focusing on the direct distribution to the rural areas. At the same time, we are investing behind the brands in terms of the AdPro, and we are growing on the rural market. As far as the urban is concerned, on the distribution channel, our focus is on the e-commerce, where we have seen a very healthy growth, and we are using the digital media in terms of reaching out to our consumer and getting the feedback and providing new products. We are coming out with the new product launches, and also at the same time our modern trade and cash and carry is also giving us a very healthy trend. On the other hand, on the general trade, we have seen stability coming back since the impact of GST is behind us now. So our focus is on ensuring the reach expansion, ensuring the product portfolio enrichment, and exploring the new channels of distribution to reach out the customer. And keeping all these things together, we are strengthening our distribution network.